Morning, Greg. Hey guys, how you doing? Let me know if you can hear me okay. Just go ahead and put it into the chat box. Harian, good morning. Kurt, good morning. JD, good morning. Brian, Pete, Jeff, good to see you guys. Good morning, Eucharist. Glad to see you guys on this bright Thursday morning. Hey Dan, how's it going? We are recording. Hey Dan, how's it going? Dan,
Can you hear me?
Yes, I can hear you.
Hey, good morning.
Good
We're doing good. I'm just looking for my final exit.
Oh yeah, absolutely. Let me share my screen. It was a good short this morning. It was actually fairly easy. But yeah, it's getting close to.
There's a nice little push there.
Yep, I'm getting close to getting out of this one myself. Still in there. Excuse me. So yeah, it looks like the diamonds are starting to push up, or the YM is starting to push up a little bit. The NQ is starting to push up a little bit higher, but definitely a good short position this morning, which was fairly easy, I think. So yeah, as soon as I start to see the YM kind of turn positive here, I think I'm good for the day. So I'm gonna go ahead and get out of this. Yeah, that's good. So yeah, nice day today. 1700. Now this is pretty interesting day. We've had a couple of down days this week so far on the Dow. We're bouncing a little bit today, so we'll see what happens. But all right, hope everybody's doing well. Let's see who's in the chat room here. Make sure I get everybody in. Today was easy. Yesterday was a little rocky. Yesterday was a little rocky. You're absolutely right. There is a new. I thought I saw JD in here. Where is JD? He was here just a second ago. JD has come out with a new indicator that I've been using, which has been pretty good. He generated some extra money for me yesterday from this indicator. I'm going to show it to you in just a minute. I can hear you, but cannot see the screen. There should have been a window that popped up that said, oh, now it's good. Okay, good, Brian. So, shout out to JD here who just joined us. JD created an indicator from the bell curve that I've been kind of testing out here, and it's really fantastic, actually. I really like it. Did you have a chance to play around with it, Dan?
I definitely have that guy loaded up and been watching it myself.
Yeah, really interesting. Good confirmation. But let's take a look at the spreadsheet here. Hararian, is that how you pronounce your name? Am I close? Hararian? Hari? Okay, great. Okay, terrific. You never quite sure. And I don't want to butcher your name, so thank you. If you're new, basically what we do is we trade volatility arbitrage, and that's the primary strategy that we use here. And it's all based on this spreadsheet, YMNQ spreadsheet. We also do the RTY and the SPX. But this is the one that I've been using. And we use a spreadsheet to determine whether or not the spread is going to widen or either go up or down. And so that's what we're doing. If you don't know, if you haven't taken, are you in the HOLM program, Hari? The spreadsheet is in the HOLM download page for HOLM 1. I think it says HOLM 2017. Oh, okay. It's in the download page. So just search for HOLM download page and you'll see it. It's right at the top of the page. So this might be a little confusing for you, but if you go through the HOLM1 program up to about session 16, I think you'll get a pretty good handle on it. So so what'd you think of the spreadsheet today, Dan?
I thought it was a nice setup seeing that first 3. Although we're not starting with a 1, so it wasn't perfection, but you can't ask for perfection. But I was definitely biased to the short, and also looking at that 3rd or that 5th column number. If you scroll just a tick, I did note that that was a big change to a negative 105. And the 3 zeros there that you're seeing in the binary trend is lining up for continuing the short. That's the other part that I'm always watching for, is as you have that 9 bar squared off there, then look at those nice 3 days in a row.
Yeah.
So it's probably not going to continue forever, but we're definitely, that's why we've been short for 3 days straight here.
Right. Exactly. Yeah. Yeah. That was a pretty good read. We started to get zeros here, which is a negative in the binary trend. I was looking for this to fill out I think I mentioned to you, or I mentioned to Steve yesterday. Steve is another private client, and it should start to fill out at this point. If it didn't fill out yesterday, then I would be probably looking to go on the long side. But we had 2 peaks in the binary trend on the positive side, and that's pretty rare. Typically, we only get 1, and then we get some kind of, choppiness before we go into a negative trend. But we had 2 pretty well-formed positive trends here before going negative. Let's see. Harry says, as a guide, and recently went through your guide on how to use MT for a swing mill. Okay, good. I don't use that too much. I created the guide, for swing signals, but definitely the volatility arbitrage trade is my bread and butter trade. That's what I do most of the time. All right, so
it just keeps going,
and it just keeps going every single day. So so really some interesting stuff here. Number 1, JD. JD, are you back? Are you in the room? I see you, JD. Yes, you are here. Excellent. Well, JD on his own, JD's a private client. He hasn't actually even started sessions yet. He's coming up in October. But he created the bell curve oscillator in beta. I would say, wow, it's far beyond beta at this point. But yeah, this is pretty exciting stuff. So what he did was he took the formula. So now all of the formulas in the spreadsheet are open, so you can actually inspect the formulas and stuff like that. What he did was take the bell curve here that is updated typically at the end of the day, and he created, from that formula for the bell curve, he created an oscillator. And so now I'm using it with the ARB oscillator to actually determine the percentage change, and using the bell curve oscillator in conjunction with it, I ended up actually doing a trade like in the middle of the day, Tuesday. I made an extra few $100 just from the oscillator. It was really, really nice. So now, JD, I'm not going to put you on the spot here, but if you're willing to share this oscillator with the group, that'd be great. If not, I perfectly understand. But it's your property, although it's based on my spreadsheet. But JD did a fantastic job with this, and he really is I think a genius at TOS coding with the ThinkScript. I looked at his code; it's really clean looking. Feel free to share. Thank you, JD. Hey, I appreciate that. Everybody should give out a shout out to JD for sharing this oscillator, because it's really, I think, extremely helpful here. He did a fantastic job.
Much appreciated, sir.
Yeah, definitely.
I see you changed the colors on it.
Yeah, I changed the colors. Sorry, JD. I changed the colors on you a little bit because there are just too many colors. I just kept it blue and red. It was good for me. So Jeff has a question for you, Dan. Can you see that okay? He's right up at the top of the chat.
I did not see it. Let me scroll mine back up. I know you look at the ISD on both the XL and the NQ to get in on the right side. What happened this morning? It was all over the place. You're definitely correct. We opened up and NQ was like a plus 40 or something like that, just bouncing all over the place. So what I do in times like that is I rely on my barometer of the spreadsheet, which was, as we've discussed, should be continuing a short position. And then I also watched this one. I didn't get in for 5 minutes, which would have been interesting because I probably would have made some profits there, but I wasn't comfortable. So I watched for 5. I drew in my line at the middle of that 5-minute bar. And then I saw that YM was below, NQ was above. And just because supply and demand was hopping around as much as it was, I knew that causes interesting things to happen. So I trusted in the spreadsheet direction bias, and being above and below is a nice thing to have when the prices are opposite like that. So I went short and it worked out. Does that help, Jeff, with this morning at least?
Hey Dan, I'm gonna let you take over for a second. I'll be right back. Somebody's got Neil. I'm gonna have to mute you, buddy. There you go. I'll be right back, Dan.
Okay, no problem. I'll keep everybody busy. Did you look at the percentage? Yes, absolutely. So looking at the open, we were close to, if I remember correctly, positive 0.05, I think it was, give or take, on the YM. And the NQ was already positive, like a 0.40. So that's showing us short the weaker one and long with the stronger one, as they like to say with the horse racing. And currently right now, if you look at it, we're at a positive 0.16 on the YM, and it's already up 1% on the NQ. So that's why that short position worked. I think the one thing that might confuse people is they say short and they're expecting things to always have to go down. That's the difference in the spread trades, is you're just trading that differences. You're not actually needing for one or both of them to go down. It's just one is outperforming the other, and what we're doing is we're trading that difference. Does that make sense, Jeff? Oh, that's awesome, Greg. Good. That's exactly the same thing I saw when I started honing in on this, is consistency. This entire month, I've had only one down day, which was last Friday. Every other day's been positive. So perfection would be nice, but I'll take 95% and take those profits. Dan, where would you start with the volatile arbitrage learning? I would, as Dave said, go through the HLO 1 and 2s. Those will help. You'll kind of get a background to where this all built from. And it's nice to see how it came to be. Dave talks about, you'll see the change in the spreadsheets over time, because this has been evolving for years. So just in the last couple major sessions is where you see it come about. So that'll give you the good base for it and the background knowledge, and then applying that to the most recent ones. I'd say the day trading or these trading room videos are going to be great. HLM is HL, high level option opportunity mentoring, that they were group lessons that Dave did, 2 in 2017 and 1 in 2018 earlier this year. So in those, he talks about the high strategy used to be a total market trade. But as Market Timer released the spreadsheets and the scripts to go along with it, we've been able to refine and basically surgically target where we do things so we don't have to hold positions as long anymore while still increasing profits. So these scripts that go along with the Market Timer spreadsheets and Dave's arbitrage spreadsheet puts everything together. So I would say, personally, I've watched everything that he's done, obviously. So that helps with just base knowledge, and the more knowledge you have of what he does and what we're doing here, the more confidence you'll have.
Well said, Dan. Well said.
Thank you.
Yeah. So Eucharist has a question about the MT arb trade. Let's talk about that for a second. Dan and I talked about this on Monday. Here's a great lesson for you guys about following a system versus not following a system. And Dan and I talked about this Monday. He goes, "Well, you had a rough day on Friday on the MT arb trade." And I said, "Yes, I did." And of course, it was the same thing for my personal account. But here's something that you need to understand about this particular type of trade. This particular type of trade is like an oscillator. It's just like the oscillator that JD built. When you have a negative curve, you also have a positive curve generally that follows it. In this case, the positive curve kind of extended, so we had two positive curves, which is really actually pretty rare. So on Friday, right at the end of the day on Friday, I had this set up right here on the 20th. That was Thursday night. It looked like we had a peak in the bell curve at 8 and it came down to 5. I was anticipating a negative bell curve or a switch to a negative spread. And so what happened was on Friday morning, I ended up putting on a position that was short the spread, which I knew was going to happen. I knew it was going to go down. And then I put it on and I left for a meeting. I actually went to a meeting about 45 minutes away, anticipating that even if the spread did go negative, it wouldn't go down. It wouldn't go negative by much. Instead, it ended up being up 0.83, which is a pretty big move on the spread. And so it caught me by surprise when I got back to my office late Friday afternoon because I hadn't kept an eye on the trade. I anticipated that it wouldn't move much to the upside, but instead it did. And so we ended up having a drawdown of about $5,000 on the spread on C2. If you guys don't know about C2, this is Collector 2 where I post my trades. And here's that $5,000 drawdown right there. I had a question from, of course, for me, giving money back to the market is absolutely not an issue because I know I can make it back. That's never a problem for me. Most people, they get nervous. And so I had an email from someone this morning and said, "I'd love to follow your trades, but I can't afford a $5,000 drawdown." And I'll get to a solution about that in just a second. Number one is C2 allows you to adjust the number of contracts. So if I do 3 contracts on C2, you only have to do 1. So that's what happened on this 5,000. I was anticipating ahead of time that the spread was going to go negative, which it was, and it is. It has gone negative. This is called, in my language, a fat tail. So what happened is we started to come down on the spreadsheet, and I ended up getting a fat tail, which knocked the heck out of the position. But my point is that I did not follow the system, right, Dan?
Correct.
I did not follow the system. That's what happens when you don't follow the system that I taught Dan. Now, if Dan did this, I would yell at him. Dan is a gentleman, though. I don't think he's going to yell at me. But I should be yelled at. I should be yelled at. So anyway, that is not following the system. This is what happens when you don't follow the system. When I got back, the 24th was Monday, I made up $5,000 of that. Following the system. I followed the system. And then, since then, of course, then today's trades, they were all up. So, in the net, 40% in about 8 weeks, because I started on July 9th. So, it's been about 8-9 weeks. But this is what happens. So, this is a lesson, guys. This is a lesson, okay? You can learn from me. Not following the system, following the system. No, there's no stop loss in this trade. None, zero. Because what happens is if you try to use a stop loss with the system, it'll knock you out of one side of the trade, and then you get stuck with a long position or a short position on the other side of the trade. And that's the last thing that you want to do because the market's going to move against you very, very quickly. Today, let me kind of illustrate this. So, with today's YMNQ trade, if you got out of, let's say you got out of a stop loss, you had a stop loss on the NQ. Well, now you're missing out on the $1,800 in profits that you had. And if you do a stop loss on the YM, that's your protection against the NQ. And so if you're knocked out of one of those positions, you're going to lose that $1,800 in profits, and you're going to end up with a $90 loss on the day. And then if you're stopped out of the YM, that's the protection against your NQ. You're not going to have the protection against one side of the trade. So you can't use stop losses with this, and that is probably, I wouldn't call it a drawback. I would almost call it. It's not an advantage, but what would you call that, Dan?
I almost call it, I was talking about it in some of the videos that I've done recently. I think I said that exactly on like Tuesday, where I think there was an announcement. And it's kind of like you're hedging yourself because you're short one and long the other. Whereas only if you're on the complete wrong side is it going to hurt you. And that's why you pay attention when you get in. And as long as you see it trending the way you should, you are safe to walk away. Or as you did, drive to a meeting. Unless we get completely unlucky and the fat tail happens. But yeah, I consider it like a hedge where, if you see, some announcement comes out, like we're hearing this morning, Fed's probably going to raise hikes again or rates again. And so I think there was an afternoon announcement yesterday where suddenly everything jumped like 100 points to the positive. Well, if you're only in one of those trades, you're either happy and you're lucky, or you just got a big hole in your wallet.
Exactly.
Whereas when you're in both, you benefit and you lose in the other. So it's like protection at the same time.
Yeah, that's absolutely right. Because a 1% move using a single contract and a 1% move is about a $625 trade. So if you're on the wrong side of the trade and a 1% move, you're down $625. So that is. That is definitely something that you want to keep an eye on, but that is also pretty much on a single contract your maximum risk. If your maximum risk on a single leg of these is infinite, basically. So I'd rather have the $625 risk rather than an infinite risk on that. So well said.
And Eucharist calls it out there. Yeah, you need to have a mental stop loss in what you do. So
yeah.
You might go negative 1, 2, 3, 4, or 500. That's got to be whatever your risk appetite is.
That's right.
Some people can be 1,000. Some people can be $50. That depends on what you need.
Exactly. And Kirk says yes, it's a hedge. It is a hedge. Absolutely. So Charlie says NQ moves pretty erratic compared to yes, and that's if you go through the HOLM1 program. We talk about the different levels of volatility of each one of the instruments, and let me see if I can illustrate that just a little bit. But yes, because it's much more volatile. And so that's where the hedge comes in. So that's where the arbitrage comes in. And so if you've got the YM and you got the NQ, well, on a volatility scale, you're going to have, NQ up here and you're going to have YM down here. And this spread is what we're doing. It's a volatility arbitrage. So when the spread widens too far, it's going to come together. We make money when it comes together, and we make money when it's narrow and it starts to widen out. That's our profit. So that's exactly right.
And Greg, you were exactly right there. It's very common for us to be done before the top of the hour, after the market opens at the bottom of the hour.
Yes. Yes. Greg noticed that. Yes. Yes. In the arbitrage trade, yeah, the MTR arbitrage trade, that's exactly when I enter an exit position. So you're basically in and out. This morning was, yeah, like it wasn't even 4 minutes.
Yes, you got that first bar, didn't you?
Yeah, it was like 4 minutes. So typically the trades are pretty short. As Dan, I heard you say that, when we get our profit target close to like 95%, that's where we take our profits. Yeah. Yeah. So that's the deal with that. And somebody emailed me, so they said, well, I can't take a $5,000 drawdown. And I said, yeah, that's fine. I mean, for me, $5,000 drawdown is, comparatively speaking, yeah, I don't like it, but it's not going to kill me. For others, though, it's going to be, really, really hard. But you have to understand, too, that we are not barbecuing on a Sunday afternoon. We are taking massive leverage, which futures contracts afford us. And so when you take 2 contracts on each side, you're actually leveraging close to $500,000 positions. If you take 3 contracts on each side, you're talking about close to $750,000 in leverage. So there's risk with futures trading. And it doesn't matter if you hedge it or if you don't hedge it. If you do something else in order to, you view your position, you use stop losses, there's risk in futures positions. I've seen positions that I've had where I was just day trading and, this was back in 2008, and I would take a position and TOS would freeze up. I was still using TOS at that time to trade futures. TOS would freeze up, and the market had moved 100 points against me when it came back live like 3 seconds later. And I'd be down $3,000-$4,000 on a trade. The worst drawdown I have ever had was trading natural gas futures. I was trading it in the morning. The futures ended up, when they came out with the supply numbers, it dropped like a rock. I was up $8,000 on a trade in like 30 seconds, and it completely reversed against me. And in like 3 seconds, I was down $12,000. So that's a 20,000 point difference in about 6 seconds. So comparatively speaking, the kind of risk that you're doing with volatility arbitrage, the way we're doing it, is really nothing. But you have to understand that it is still, you're talking about leveraging, $500,000 on a trade. So it's not risk-free when you use futures. So what I suggested I've suggested this to a couple other people, is just to take the diamonds and the Qs. Now, yesterday I did this with another private client who was also concerned about the kind of drawdowns that you have using futures contracts. And if you're not fully versed in the volatility arbitrage trade using the futures contracts, or just in general, if you're not really versed in how this trade works, then I suggest using just the ETFs. So for example, yesterday I just put on a short position, 10 shares of the diamonds short, and long 10 shares of the Qs. And I'm up about $16. So if you want a way to train with very low risk, I think the best option for you is just to use the ETFs. And now you're talking about 2 times leverage instead of 100 times leverage. With futures contracts, you have 100 times leverage or more. Actually, with the diamonds and the Qs, you have 2 times leverage because you use a margin. And options, I don't know, Dan, did you ever try options with the spreads?
No, I got tired of fighting middleman and the market makers.
Yeah, see, I taught that in our NRT2, which is the options strategy using the diamonds and the Qs, but I got to hate it after a while because of that. The spreads were killing me. Um, I mean, basically, you couldn't day trade it because it didn't move fast enough unless you did a lot of contracts. Excuse me. And then not only the spread was bad for the trade, but also the commissions on a large number of contracts were really bad on a trade like that. And then trying to get out, you're fighting the spreads again. Yeah, oil futures, Greg, are definitely also something that can move really, really quick. Do you still do NRT1?
The
Dave?
YM Flyer?
Yeah, do you do that one?
I do not. I strictly do this arbitrage trade because if it's not broke, I'm not fixing it.
Exactly. And now that we have so many more tools that we can use for volatility arbitrage, there's really no reason to do anything else, in my opinion.
Yeah, I can make $1,000 a day in a half an hour. Why do I need to look somewhere else?
Exactly. Yep.
I'm not that greedy.
Yeah.
NRT is near riskless trading.
Yes. And that's
there we go. Sherry's on it.
there he is. Yeah, so with the volatility arbitrage, I mean, basically, there's the opportunity is almost daily. I didn't trade it yesterday because I was with a private client in the morning, and you tend, because it is a very short term focus trade, you really need to do you need to have that kind of focus. NRT details are in the HLM1 2017. Thanks, Greg. Yep, that's exactly right. What else was I going to show you here? ESRTY. Ooh, here's we just added this recently. ESRTY. Nice trending trade here. Oh, and it's up nicely today too.
Yeah, it's up huge. It's almost at 0.5%.
Very, very nice. Yeah, really, really smooth uptrend here. And you had this like regular kind of move lower, move lower, move lower, move lower. I mean, it was just like clockwork. Really. I mean, it's just absolutely gorgeous. Nice move today. So, I mean, there's a couple of things that distract me. I probably end up doing more trading, but certainly dealing with private clients is slightly distracting. But I love the interaction. I love to talk to you guys. And now that I've learned this is a skill that once you learn it, you will have it your whole life. There's nothing that can take away from this. It has taken me. I started trading in 1974. I went through 1987. I went through the crash in 1987. Did not trade the crash of 1987, but I was trading bull call spreads from March to October of that year, making pretty decent money. Until about July, when I decided that the market was going to go down, and I bought $16,000 worth of puts, and they had expired in September. If I had kept them till October, I would have been very, very rich. My point, though, is that I have probably seen, read, experimented with, and tried just about every single trading system available on the market. And a great deal of them are incredibly expensive to test. I've probably spent $100,000 just on educational materials alone, buying other people's courses, buying other people's trading strategies. I have not found anything close to the kind of, and I'm not going to say that it's almost risk-free, but I mean, it is fairly riskless. But it's also much easier to time and to have some degree of certainty about the direction of the trade because of the tools that we've developed. which include the spreadsheet, the YMNQ spreadsheet, the SD and the ST indicators. Those are recently new, which have helped tremendously. And now I would include the script that JD did based off the spreadsheet, which is the bell curve oscillator. I think it's extremely helpful. So as we can, I mean, this is a very, very solid system. And like I said, I probably spent $100,000 on different educational materials, books. If there's a book out there on a trading strategy, I probably read it. I've gone to Dan Sheraton's seminars and conferences. I've gone to, there was another one out there. What's the name of it? Random Trading or something. I forgot the name of it. But they were an outfit that did live trainings. I went down to Washington I think it was back in 2003 or 4. Charged me $5,000 for a day and a half, really, because they finished up about 2 o'clock the next day. And basically just taught the basics of trading. Right? Support resistance lines, which don't work anymore. For a lot of different reasons, but high frequency trading is one of them. Let's see. Greg, been watching ESRT, but I need another screen. I don't have enough screen room at this time. Yeah, that could be a problem because, you know, as you can see, I've got a number of different windows open here now, and yeah, it does take up the full screen. And I'm on a 27-inch monitor. I have 2 laptops. I have a Mac and a PC laptop where I trade Lightspeed and Interactive Brokers. So yeah, you definitely need more screen, but you know, I mean, you know, you can move them around.
A couple of trades, you can afford the cheap monitor, right, Greg?
Yes. Dave Cherry asks, Dave, can you let us know how to use JD Script intraday? Well, I've only had it a couple of days, so caveat there. But let me pull it up here and see where have I got it.
That's why we still call it beta.
There we go. Yes. Yeah. So it's beta. But basically what it does is it imitates the spreadsheet bell curve. And so just like in the bell curve on the spreadsheet, right, we want to, this is really important, guys, we want to peak. When we see the peak in the bell curve, that's the time that the trade is going to switch. So if we see a peak in the bell curve, typically it's going to go, in this case it went from positive to negative. In this case it went from positive to negative. And then here we went from negative to positive. So when you see that peak in the bell curve, then that's the time that you want to start looking to take the opposite side of the trade. Well, the same thing is taking place here. Now I've tried different time frames. The 1 hour time frame seems to work out pretty well for me. I kind of like the way it acts. We had a peak in the bell curve. The bell curve just started to decline. We had a peak in the bell curve to the downside. It started going up, and now we have this kind of very, very weak looking setup here on the plus side. We get a little bit of a peak, and then it started declining. Very weak bell curve to the upside, which is a red flag saying, hey, this is probably not going to last. We're probably going to continue to go lower. And now we've got a peak, and then we're forming another peak right here. But you can see it looks like, and he's got lines on here at 7 or 8 on either side. I would probably set the lines at 5 on the 1 hour chart instead of 8. Because that's where it looks like it's kind of peaking out, right around the 5 level on a really, really good move. And so just like the spreadsheet, you want to hit that peak and get out. If you're short here, you want to hit those peaks, get out, hit that peak, get out. So that's how I'm using it. I'm using it on 1 hour. You could probably, on a shorter time frame, it's a little bit more, it's a little more volatile, so I probably use it on a 1 hour. What did I miss?
Harry's got some follow-up emails for you. And Greg's getting a new computer for Christmas.
Good. Excellent. Oh, MacBook Pro. Yeah, that's what I got. That's what I'm using. MacBook Pro. And then I've got a ThinkPad for my PC laptop.
So good clarification. He calls out there. I'm sorry if I get it wrong with Sherry. Could go either way. But based on the peak. So you might want to explain how you look at it as, are you looking at that for an entry or an exit?
Good question.
Because it could technically be both, right?
Yeah. So there's three things that I look at on the spreadsheet. The very first thing I look at is the bell curve to see if it's peaking or not. The second thing I want to look at and use this as confirmation, and this is the mistake I made last Friday, was that I thought this was the peak here, but there was nothing in the binary trend. And so I always look at the peak to see if it's peaking on the bell curve. I want to see confirmation in the binary trend first that it's negative. That's really important. And I totally ignored that and did not follow the system. And so, but that's the second most important thing. So now that we see a peak here on Tuesday, we started to see a negative. Okay, now we got a peak. We also have negative numbers in the trigger and the ROC, indicating a potential down day the next day in the spread. And we also got a binary trend, a 0, which is representing the beginning of a negative binary trend. And we want to see that negative binary trend start to fill out from the first column all the way over to the fifth column. So then I want to check the trend. So the trend is negative. It's negative here, a little positive here, but we're starting to see the filling out of the bell curve on the negative side. The second thing I look at, the third thing I look at, first I look at the bell curve, then I look to see if the binary trend is starting to turn negative. I look at the triggers. Then I want to look at this fifth column over here to see where we are, because typically the spread will stretch out to 2.5%. That's a pretty big move. We had a little bit of a pullback here when it hit 2.5. 1.5 is pretty big, but anything over 2 is pretty big, and that's also another data point that will indicate potential reversal in the trend. So those are the things I look at, and in the order that I look at them: bell curve, binary trend, trigger ROC and trend, and then the fifth column of the spreadsheet. So the only thing that we don't have with JD's with the bell curve oscillator is the binary trend. I'm not sure
It says
how.
you can that for daily, so switch that to a daily chart and see what it looks like.
Yeah, okay. You did that. So, yeah, I mean, so it looks like we're still filling out the negative. So it follows along pretty well with the spreadsheet, yeah. There's that fat tail that we had last Friday. Yeah, it looked like it was starting to come down, then we had the fat tail there. So this is probably why JD has the markings at around 8 on the downside and the upside, because of the daily here. But you can see we start to go up, boom. We hit the peak in the bell curve, move higher, boom, right up here, and then we hit the peak here. That's the time you want to get out. And then it started going down. As soon as it starts going down on the other side of that bell curve, that means a new downtrend is coming. Nice. Let's see. Yes, plan the trade and trade the plan. You're absolutely right, Greg. Absolutely. I wouldn't blame you guys at all for yelling at me, because I missed it last Friday.
Look for that binary trend, Dave.
Yes, go for the binary trend. The binary trend really is kind of like the confirmation. See, like here, It was perfect. We had the binary trend starting in the first column. It started filling out, filling out, filling out. You know, at this point, it's filling out beautifully all the way to that fifth column. You get a big day here, nice day here. And so, you know, that's the kind of thing. Now you see the peak. There's the peak. You get 2 8s in a row, that's a peak. And then it started going the other way. Now you get the binary, you start to get the trend change. You're looking for that. So those are the things that you need to look for. And then this particular type of system, though, is probably, I don't know, Dan, you traded a lot of different systems. What is there anything that you've seen that even that would beat this system? Because I'm always, I mean, I'm not saying that this is the greatest thing in the entire world. It's the greatest thing that I've found since 1974 of trading. But I mean, maybe there's something better out there, but I don't know what it is.
Everything else I've seen requires you to hold things so much longer that your exposure isn't worth the risk. Like I used to do, things where you 2 to 3 weeks and you're happy if you had a $50 profit on like an options strategy. It's like, okay, I have to put 20 of these on to make some money, and even if 2 go against me, it's going to wipe out 6 of my winners. So what's the point? Right. So I've been looking for everything, prior to finding you years ago. And yeah, I haven't found anything else that even comes close. The biggest thing when I talk, like I actually have family and friends that are linking their accounts to mine because they've seen what I've done. They're like, hey, can you do that for me? And what I explain to them is, as Dave was mentioning earlier, futures trading is absolutely risky. How I reduce the risk is by having the edge with the spreadsheet, the indicators, the scripts that show us live information, and by also being able to be in and out. We'll call it an hour on a bad day. You reduce that risk so drastically that now, I don't have to worry. I'm out. And I'm not holding it, overnight for hours, for weeks or days. That's the biggest difference that I see, and why I'm not even looking for anything else to compare, because, not trying to say this is the best thing since sliced bread, but I haven't found anything that comes close to it.
Yeah, actually, that's a really good point. The hold time is critical, because the exposure that you have in the market, especially just a longer short position, and also, I think this is probably the longest trade I ever held in the MTR trades. I got in at 9:38, and I kept it on till 11:30. And you're up $5,000. So that was probably the longest time. But that was on the spreadsheet. It trended beautifully. It was this day, the minus 92 day. It was almost a full percentage point spread between the YMNQ. And I knew, of course, with the peak there, that we were going to decline. And so I held on to it, but a little bit longer than normal. But the whole time still, 2 hours on a trade, that's still nothing.
Right.
But we've held it much, I mean, sometimes we're only in 4 or 5 minutes, 10 minutes, making $1,000. I mean, you can't beat that, really. Let's see. JD, FYI, my caveat is I developed it for the daily charts, okay, to visually identify the peaks. Put it in Dave's hands for further testing. Yep, I definitely am. That's why the peak lines are at +8, -8. Gotcha, JD. Yep, that's what I figured. Absolutely. For the trend change Charlie asked for the trend to change, trigger, ROC, and trend has to be all negative? No, not necessarily. So each one of those has a little different function. Like the trigger is basically just kind of an indication of what might happen the next day, but there's no magic to that. The ROC is more important actually, because what it does is it measures the rate of change. The ROC is the rate of change in the volatility arbitrage spread. So as we hit a point plus 0.83 here, we had a negative in the rate of change. which indicates to me that the pluses that we had here, 0.23, 1.15, 0.66, was starting to decrease in the rate at which it was going higher is starting to decrease. And so that's an indication that we're going to go negative the next day. The trend is just whatever the current trend is. So it went positive, started going positive here, had a little negative, positive, positive. So it just matches basically the volatility arbitrage spread. The only time I really pay attention to this is when we change, when it looks like all the other indicators are changing from a positive to a negative like they are here. I want to see this starting to come down and turn negative like it did here. And so that just gives me additional confidence that we're on the right side of the trade. That's all. But what I do is actually this column here, this X column, I've been kind of testing it out. It's just an addition of the binary trend column, the trigger, the RLC, and the trend column. All of these 8 columns. And it's just an addition of all of those 8 columns together. And I want to see if it's kind of peaking along with the 5th column over here. And starting to come down. And so, you see here that it was 8.75, which is really high on the positive side. And then it dropped down to 3.88 here, which is a huge decline, even though the volatility arbitrage spread was up. But it gave me an indication that the spread was going to probably start to decline as well. So all of these tools help in making the determination. The biggest one, of course, is the bell curve and the binary trend. That's where I prioritize. Dave, currently, is there a massive difference in spread between the YM and Q? Both are moving up. Spread oscillator is negative. How do you trade it? Both are moving up. Are they? Dan, how do you read that question?
I read that as the question is, how would you get in right now? And my answer would be, I wouldn't.
Right. So Char, are you asking like, okay, so he got it right. Dan got it right, yeah. So, so typically, you want to follow the trend, of course. But also, during the day, the spread is kind of set, and it's really rare for the trend to change midday. Occasionally, it will change, but for the most part, you want to kind of stay with the trend. But there's not huge movement in the spread during the day.
I have tried that where it's like, hey, we're going here, and it's very common. Like right now, we're coming up on 10 my time, 11 New York time. Mm-hmm. Whereas now we have one more hour in this 4-hour bar, we could easily retrace some. So even though it's been strong to the short side, if you were to get in short right now, that doesn't mean it's going to continue. It could retrace some. It could grow a little bit more, but I don't use the tools to try and get in midpoint.
Mm-hmm. Mm-hmm. Right, exactly. This is where I got in this morning, right there. And if you take a look at the bell curve here, it looks like we're starting to extend. Maybe this is the fat tail. We get a fat tail. We'll see.
Yeah, we're at a 0.54 on the 4-hour right now, so
yes,
it either could stay there or it could go back, and we'll see.
So, for you guys who are new, the average move in a day. So, what I did was I took the average volatility spread on a daily basis and averaged it over the last 4 years. The average move is 0.50. It's about a 0.5 percentage move. And so, when you reach that level, or like Dan was saying earlier, 90 to 90% of that level, the chances are that's pretty much the end of the trade, unless it's moving very, very sharp, very, very fast. That's probably about as much as you're going to get out of the trade. And so, you want to you want to take your profits. Greg
A good way to
asks,
think about that is there's less probability of being able to predict what will happen.
yes, yeah, that's a good point too. That's right. Yeah, that's right, because you had the signals. You had the signals from the spreadsheet. You had the signals from the oscillator, and you had the signals from the charts. And so at some point, you want to, if you could take $1,000, let's say somebody offered you $1,000, and but it wasn't guaranteed. It was like a 20%. Let's say a 20% chance of you making $1,000, or you had a 90% chance of making $800. Which one would you take?
Exactly.
Yeah, you're going to take the higher percentage. Greg says a lot of the volume in the market goes out around 11:30. That is when European market closes. Yeah, it's also when all the Wall Street bigwigs go out to lunch.
They go for their liquid lunch.
Yep. I've told this story before. I was walking around Wall Street. I was down on Wall Street for about a week. And I was walking around 11:30, and all of a sudden everybody started coming out of the office buildings right around 11:30. And they're all at the lunch. And then I kind of sat there and watched them for a while, and they all didn't return until 1:30. They take nice long lunches there. And that's why the volume dies between 11:30 and 1:30. That's my theory. Anyway, anybody else have any questions? We've got just a couple of minutes here, then we're going to wrap up. All the spots for November are completely filled for private clients, in case you guys were interested. But Dan has offered to take up any clients, to take a client if you guys anybody's interested in the November 1st training to get started. The private client sessions start on the 1st of each month. And so if anybody's interested, I will be there with Dan if you'd like to join. Dan and I will kind of be as kind of a tag team, but Dan will be the primary coach. Dan's a great trader. He's learned probably every single thing that I've taught. And I totally and 100% back Dan as far as his trading goes and his understanding of the system, the volatility arbitrage system. He really has it mastered. And so if anybody is still interested in taking a private client position for November, Dan is volunteering to come in and teach you guys. So if anybody's interested in that, please let me know. Send me an email, davidtradingology.com. Brian's going to be a private client. He's waiting next Tuesday. Excellent.
Appreciate your kind words there, Dave. Thank you.
Yeah, no worries, man. You really mastered the system. I'm not kidding. If you're interested, Harry, just email me at davidtradingology.com. And Chari, Dan's insights are awesome. Yes, they are. He does have really good insights into the system.
Thank you.
Yeah, yes, they are. Yeah, absolutely. Dan would love to spend some time learning from you. Awesome. Yeah, Dan is my number one student, and he's put the time in. He's got a trading background, and he's also set up a trading business. So just like I taught in HOLM2, he's actually taken that to heart and set up a trading business for himself. So that is very, very good. All right, guys, thank you very much for joining us. Really appreciate it, and you guys have a great day. Yep, Jeff, starting private mentoring as well, November 1st, absolutely. JR, send me an email, and I'll send you all the details. Eucharist, no problem, buddy. Have a great day, guys. See you, Dan.
See you guys. Thanks, everyone.
Have a nice weekend, and we'll see you next Tuesday.
Sounds good.